In this video, we're going to talk about something really fundamental to accounting, and that's the idea of this debits and credits notion. So you might be wondering, what does debit mean? What does credit mean? Does that mean increase or does that mean decrease? Does debit mean an increase or credit? So I just ask you for a moment, just kind of hold aside any preconceived notions that you might have about what these words mean, and let's just think of them in these terms here. Let's think that debit, when we say the word debit, that's synonymous with the word left. And then when we say credit, let's think of credit as meaning right. So debit means left and credit means right. So let's just think about that for a minute. Now you might be saying, well, left and right with respect to what? So let's return to the basic accounting equation. So if you haven't gone over this, I suggest you look at the other video. But we've got assets are equal to liabilities and stockholders' equity, or owner's equity, however you want to think about it. So we always know that the left side is going to equal the right side, and this equation must balance. So let's think about this. We just said that debit means left. So here we've got the left side of the equation, right? So how do we think about this? Well, since debit is left, we can think about this, that assets, when they increase with a debit. Okay, so when we think of an asset, let's take an asset account like inventory or cash. Those are assets, and assets will always increase with a debit. Okay? Now, we can think about the right-hand side of this equation. And we've got liabilities and stockholders' equity. These are both on the right-hand side. And remember that we said credit means right. So how do we think about that? Well, we just figure that when we have an increase in a liability account or a stockholders' equity account, it's going to increase with a credit. Okay, so any liability account, accounts payable, bonds payable, any stockholders' equity account like retained earnings, those accounts, since they're on the right side, they are going to increase with a credit. Okay, so just remember that debit means left and credit means right. So that'll help us when we think about this accounting equation. We understand that assets will always increase with a debit, and then this right-hand side, liabilities and stockholders' equity, any of those accounts will always increase with a credit. So now you might be wondering, okay, well, what about accounts that don't show up here? What about ones that we think that aren't permanent accounts, which is something we'll get into later? But why don't we think about things like revenue? What about revenue or sales, however you want to call it? When we make sales at our business, well, what happens? Well, essentially, we're affecting stockholders' equity, right? The equity in the firm is increasing when we make sales. So we can think of that also as a credit because we're increasing stockholders' equity, which is on the right side, and thus will increase with a credit. So therefore, because revenue is increasing stockholders' equity, it will increase with a credit. Okay. Now, we think of expenses. Let's think of expenses. Now, when we think of an expense, it's something that is decreasing stockholders' equity. Okay, and we haven't really talked about now, well, what if we're decreasing one of these accounts? All right, we've said, okay, if we're increasing stockholders' equity, then it's going to increase with a credit. Well, what do we do when it's decreasing? We simply do the opposite. And so we would debit it. Right? Because normally we say, well, what do we increase stockholders' equity with? We increase it with a credit because it's on the right-hand side of the equation. But if we were to do the exact opposite and decrease stockholders' equity instead of increase, then we're going to make a debit. And so an expense, which is a decrease in stockholders' equity, is going to be a debit. Now, there's another account that we can think about, which is if you issue a dividend. Now, this might be something you might want to watch another video on dividends, but when we think about a dividend, what we're actually doing is we're paying out, we're reducing stockholders' equity by making a distribution, right? So there's some equity in the firm, and we're paying that out to shareholders. Okay, so we've got the shareholders here, and we're paying out some of the equity, so we're decreasing equity with a dividend. And what happens if we're decreasing equity? Well, we talked about if we increase equity, we increase it with a credit. So if we decrease equity, we just do the opposite and make a debit. So dividends increase with a debit. So now we can kind of apply when we thought of, okay, well, what if we reduce equity? What if it goes down? Then we've got these debits. We're actually doing the opposite of the increase. Well, we can think about it the same way. We can apply the same logic to assets or liabilities or equity accounts in general. And so what I mean by that is this. So when we said that when you have an asset, it increases with a debit because it's on the left side, and debit means left. But what if we were to decrease an asset account? Let's say we had inventory, which is an asset. What if we're having a reduction in our inventory? Well, what do? Well, again, we simply do the opposite, right? If we know that an increase in an asset, like inventory, is going to be increased with a debit, then a decrease in an asset would be recorded with a credit. And we can use the same logic when we think about liabilities, like something like accounts payable. Since accounts payable is a liability, right, it would increase with a credit. And then how do we decrease it? We simply do the opposite, and we would debit it. Now, you might be wondering at this point, where do all these things take place? Debit what? Credit what? Where do we, what are we doing? Where are these things actually going to take place? And we're going to do debits and credits in something called journal entries, right? So when there's some kind of transaction that the firm has, like it's recording a sale or something like that, we're going to record these in a journal. It's going to be posted to a ledger. So we make these entries to record economic transactions, and then we're going to post those potentially to T accounts, and we're going to do all these great things. But before we do all that and get into those videos, just understand that debit means left, credit means right. Assets increase with the debit, liabilities and equity accounts increase with a credit.